Today is Monday, August the 19th, and today was an interesting day given that we popped at the open and never deviated from that line for the rest of the day. The NASDAQ had a very tiny pullback, but then regained its opening high. The Dow just went flat, and the S&P nudged up a tiny bit, but you'd have to say that everything was flat today. Volume was a little bit below the 20-day moving average for all three markets. Advancers led decliners by 70 to 25%. So that is going to, and you can see, mainly green, very few reds here. There's no sector really that suffered today. What is that going to do with our market breadth? Let's just refresh this. And it's going to drive our market breadth back to the neutral line and possibly a little bit over. So this is what we could be seeing. We could be seeing a resumption of momentum, pushing money into the market on a moving average basis. But that remains to be seen. I just read a headline from Kramer. I don't read a lot about him, but he thought that this could be a trap. There's nothing that's come out of the White House today that changes anything. They're talking about helping to ease things for the consumer because JP Morgan said that the average consumer is going to have to spend $1,000 more this year because of the tariffs. So they're looking for tax breaks to replace that. You can bet that it's not going to affect the people that are mostly hurt by the $1,000. That's the people shopping at Walmart and relying on goods from China. They're not going to get a $1,000 tax break. But if that's how we are fighting tariffs by digging ourselves deeper in debt, then we have another problem that the market is going to come face to face with by September, October, and that's going to be a widening deficit and a steepening of the national debt. To quote somebody, such as the likes we've never seen before. So the S&P up 35, but we created a gap, and that's our second gap now in 3 days. The next head and shoulders is this one right here, which was support, and then we never quite got back to it for resistance. We just dropped. So I expect that this line is going to be resistance. I don't think it's going to happen tomorrow. It could happen sometime in the next few days where we're going to touch 29.56, but that value is going to get a little bit more further away as each day goes by. But that's going to be a place where technically with the head and shoulders, you see it acting as support. Then with the failure and the bouncing off the 200, you're bound to see it now acting as resistance. Apple was up $5 at one point, finished at 210.30 with this little gravestone, almost a gravestone doji, another gap created there that we can draw in tomorrow. Caterpillar had a bit of a range today, a $1.78 range, finished up. But again, blocked by the 8 EMA, and we've seen the 8 EMA coming into play quite a bit ever since it broke through the 8 EMA here, then acted as resistance, support, and then lost it. We've also got the 50 and the 200 turning down, so that's going to take a lot to turn Caterpillar around, and the volume today was anemic, very, very low. So even though it was up, there was no convinced buying today. GDX finished out of our bull flag finished by a horizontal, repeating these two patterns here. We didn't finish lower than the prior low. Of course, if the market goes up, GDX, gold, is going to go down. But it's just something good to have sitting by because on a bad day, GDX is going to pick up some of the slack for you. Whirlpool, big move. had a range of, where's the range? I don't have a range here. Let's just go into chart settings and let's go into our labels. Let's reset the defaults. So we had a range of $3.26 today, but we finished up $3.23. So that's a nice move. Stopped by the 200, and the Chiku span did get our support a few days ago back on the flat cloud and is now broken through the 200 and the 50. So the next stop is going to be the Chiku span on the 50 EMA, and let's put an alert there, and let's create an alert where the Chiku span touches the 50 EMA. And if that were to have happened today, it would have been at this value here. It'll be a little bit higher tomorrow. Our last one is Walmart that we have the call spread in, and the call spread is doing nicely. If you bought at the same time as I did, you're up $105 on a $700 risk, which isn't bad for 3 days in terms of annualized percentage. It was up about $220 at one point, but you can see the pullback. So I am preemptively drawing in this little flag or pennant pattern here because I believe that we could form a pennant pattern on a technical basis before buyers are convinced to come in and break out of the pennant. But you can see that we've had 3 days in a row. This was a post-earnings day. We had 3 days in a row, 4 days of above the 20-day moving average in volume, and today we reached that. So there's some convincing action going on in Walmart, and I'm glad that I'm playing a part there in that call spread. If you didn't see the video I posted Friday explaining the call spread, and you're a beginner in options, you can take a look at it. It's 14 minutes long, but really it's only for beginners, and anybody who's traded call spreads before is going to be terribly bored. That's it for today. What to expect tomorrow? Well, after 3 up days and 2 weeks of decline, and the 50 SMA ahead of us, I think we can see some slowing down because I'm still not convinced that we are in a return to a bull phase of the market. From an Ichimoku point of view, I said we would be moving in the cloud. The cloud is getting wider, which just supports my theory now that we are going to wander between this flat bottom and this rising top for a little bit longer until we get into this squeeze portion here. You know, we've got the this trend line ahead, so we've got 29.56 is going to stop us tomorrow. And if that were today, it would have been exactly at the top of the cloud. So let's see what happens, but I'm just being conservative. It's still August. A lot of traders are on vacation.